Thank you, Andreas, for taking the time to chat with me and for the benefit of our audience. As you heard in my opening remarks, there's been a lot going on. I mean, some would say extraordinary forces and trends over the past few years. From your perspective, given everything that you're involved with, how do you perceive what is happening?
So my summary would be that I'm very positive about the shipping outlook, and I'm very worried about the world outlook in the near term, at least. During the last few decades, the last half century, we've built this incredible economic machine, and it was built on the back of cheap energy, cheap money, low-cost labor in emerging economies, and a peaceful global trading system. And what we did was, of course, we used cheap energy, cheap money, low-cost labor to build whatever we wanted to build, and then we used this incredible global trading system to move it wherever it needed to go. And we've just put that system through a period of unbelievable stress. It's a pretty resilient system. It survived the 2008 financial crisis, but this time around, we took the supply side and crashed it down, in some sectors at least, dramatically. And then we ramped it back up dramatically by pumping trillions of dollars into the system. So we took demand through this massive gyration. And on the supply side, we dramatically reduced the labor force through lockdowns and resignations, through sickness and even mortality. We underinvested in energy and infrastructure more broadly, in part because of ESG concerns. And we reduced free trade on account of geopolitics and misunderstandings. And this is all before the Russian invasion of Ukraine. So all these trends were happening even before Ukraine happened. I think the simple point I'm making here, zooming out a little bit, and we should talk about shipping specifically, but is this machine is breaking down, and the things that we took for granted for the past 30, 40, 50 years, we can't take them for granted anymore. We've seen the strains. The trailer has been played in semiconductors, in containers, in energy, and the big movie, the bad movie is going to be if this really hits the food system. Because you can deal with shortage of semiconductors, you can deal with tightness in the container markets, but when there isn't enough food, things get really messy.
Gotcha, thank you. And maybe digging a little bit deeper on some of those topics. You mentioned a lot of the forces at work that are creating concerns happened before the war in Europe. Can some of the knock-on consequences of that war, such as energy security, in addition to the food potential crisis, or how do all of these things factor together? And maybe more importantly, you're describing it from a longer-term perspective. Is this pending disruption likely to be short-lived, or do you think it may take a while to navigate through?
So I think it'll take a long while, because now Europe has to wean itself off Russian energy, and there isn't enough gas in the world. If Russia stops the gas flow to Europe, as people are talking about may happen in the winter, and already they've started choking back on it, there isn't enough gas to go around in the world. I mean, you may have heard if the EU was to replace all its supply of Russian middle distillates of gas oil, it would need all other suppliers in the world to double their exports to Europe. And that, again, is putting a huge strain on the system. So we ran this machine, this economic machine, kind of at incredible pace and to its limits, and it was pretty resilient, but I think we've pushed it over the edge.
Right. And then maybe just one follow-up question on the first point. Decarbonization is an important component in terms of your goals, your involvements, et cetera. So all of this within the context of decarbonization asks and goals, does that make the navigation more complicated, or how does decarbonization ambitions fit into the challenges that you're describing?
So we kind of try to paint this mission statement where we say delivering energy for the world today and finding solutions for tomorrow. And this is not something we invented post-Ukraine. I'm personally just not somebody who's a big fan of these binary or extremist statements like, you know, fossil fuels are terrible, we've got to switch them all off now. But nor am I kind of a climate change denier who's saying, oh, it's all fine, let's just keep pumping and going on as normal. Somehow we have to navigate this sort of middle path. Mm-hmm. And what's so encouraging, this is an industry which is sort of, you know, almost more than others I observe taking the bull by the horns and saying, let's decarbonize ourselves. I mean, it's not every last player that's worrying about this, but there's an incredible momentum. This center we set up with, initially with 6 companies pumping in $10 million each, and then the Singapore government put another $60 million in, and then BP and Chevron and Hapag-Lloyd joined as partners. And you know, these are people who are putting money and time behind this effort.
Gotcha. Thank you. And so taking those ideas maybe from a high level, a macro level, and then taking them down a notch, and you've already started to hint at the impacts on shipping. But more broadly, I mean, you guys are involved in a lot of different aspects of the energy chain, shipping, et cetera. Before I talk about, you know, the BW Group specifically, how do you see the impacts on the broader shipping universe?
Right. So shipping is often correlated with the health of the global economy, which is why I started there. And it may then seem contradictory, my first statement being positive on shipping and worried about the world economy. What is shipping? Shipping is a play on the dislocation of demand and supply. If you don't have enough of something and you need to move it to the other side of the planet, that's where shipping comes in. And it's even better if it's necessities like food and energy. So a global slowdown may affect containers if consumer spending drops. And of course, commodity shipping is not totally immune from recession. But wet and dry bulk benefit from pent-up demand for mobility, which we're all aware of, from a massive build-out of new infrastructure, including green infrastructure, from energy geopolitics, you know, this dislocation that I referred to earlier, and just the need to sustain day-to-day livelihoods. So, you know, I'm a fan of bulk shipping, wet and dry, because it has these very strong tailwinds.
Yeah, gotcha. Excellent, thank you. And if the audio video guys can put up the slide that we had discussed. Wonderful, thank you. So Andreas, with the slide describing, you know, the BW Group, you know, and everything that you've described in terms of the macro environment, some of our challenges, coupled with what you expect within shipping, how do you invest with such a broad array of investment opportunities?
Right. Well, you all know this saying, you know, don't believe what people say, believe what they do. And so I thought rather than talk only generically, I should open up and share the BW Group portfolio, which is behind me. And what you see on the left is our shipping and maritime energy businesses, so 4 in gas, 2 in tankers, at the bottom there, 2 in offshore in the middle, and dry cargo at the bottom. And where we're looking to invest on this side is businesses which serve as essential human needs. You know, containers have had an amazing run, and we missed that one, so I probably shouldn't be dispensing any investment advice. But we think food and energy are more recession-proof, as I just mentioned, than discretionary goods. We're also looking for businesses which have a healthy supply side. We heard a bit about that yesterday afternoon, but it's looking good in dry and wet bulk shipping, and ESG has obviously been helping. And then we look for businesses with great management teams, which are best in class on revenue and on costs, and therefore on profits and returns. And just to drill down for 1 second on that, BWLPG has generated over 14% annualized ROE since the IPO in 2013 and paid out more than 100% of its market cap in dividends. Last year was a really tough year in tankers. Our tanker companies, DHT and Hafnia, both lost money, but they lost far less than quite a number of our significant competitors. And people sometimes ask, how is that possible in a commodity? I thought I was just buying NAV and, steel is steel and you're all price takers and this is a commodity market. Why should I differentiate? But you don't have to dig very far into the analyst reports to look, you look back 5 years, 10 years to see very different outcomes from the same assets. And I think these are questions, I give all the credit to the management teams of these companies, and you should ask them how they're doing it. But it is about increasing utilization, which we do through kind of just having really good traders on the trading desks, also by actually trading cargoes in the case of BWLPG. And then it's by this sort of relentless focus on cost management, being best in class on costs, financing, overheads, insurance, whatever it is, and then scale through consolidation.
Gotcha. Excellent. Very helpful. And so, as I was preparing for our conversation, I was asking some of your management team suggestions as far as what I should ask you. And one of them recommended for me to ask you which was your favorite of your companies, which I know is like trying to pick one of your favorite children. But let me ask you a different way. Which of the investments you've made do you feel has, I really nailed that worked out? And maybe secondarily, which, if any, do you feel like we're really well positioned for what's upcoming, given my view? So taking it a different direction.
Well, I'll try to answer your first question. My favorite is whoever's generating the most profits, the best returns. Yeah. But actually, that's a bit of a facile question, or facile answer, I should say, because we really believe in being countercyclical, and sometimes the favorite is the one that is kind of not doing so well, but is poised for improvement. So in the first quarter of this year, we bought 44 tankers in Hafnia. The market was totally bombed out. We had 18 months of terrible markets, and we lent in. And so, if we had really applied my first facile answer, we wouldn't have done that because, they weren't generating very good profits. But the team did an amazing job and added. So we try to be counter-cyclical. In terms of your other question, I guess, was which is the one that we've really nailed it. Yeah. We don't generally swing for the fences, and then we don't sort of say, okay, this was a slam dunk. We made it in one swift move. Actually, it's lots of incremental small things. Right. And so it's a bit of a wishy-washy answer, but we're more about lots of small wins than about one big home run.
Yep. Because whenever you go for the home run all the time, you strike out a lot too.
Yeah, exactly.
So maybe we have a handful of minutes left, and I just want to give you the opportunity, Andreas, to kind of leave us with any parting thoughts or any things that you'll be focused on, between now and the next Marine Money. So what are your parting thoughts to everyone?
So maybe just a word on the right-hand side. Sorry, if you could just go back. I'm not going to, talk too long about the right-hand side, but we are investing significantly in these new businesses on the right. And my comment here is that actually the engine room, the cash flow, the returns is very much on the left. There are some really interesting companies on the right, and businesses like Cadler in wind, which are doing fantastically well. But these are younger companies. They're in the growth phase. They're sucking in capital, typically, which happens during growth. But we're thinking 10 years out. So when I say I'm worried about the world, I'm worried about the world in the next 2-3 years. I'm pretty optimistic on a 10-year horizon because humanity is pretty amazing, and we solve problems, and we've been through tough times before. And so we're seeding the future with the right-hand side. Maybe as a parting thought, I think shipping is going to be a fun space to be in the next few years. And I'm really grateful to our investors, to our banks and other friends in the industry who are kind of helping us to build these great businesses, and the management teams that I mentioned earlier who make this all possible.
Yep, wonderful. Well, thank you very much for your thoughts, and you know, your final comment about, you know, humanity being resilient. I mean, I think the last 2 to 3 years really showcased that you know, we can emerge, you know, stronger despite the challenges that we're faced. So hopefully
we just have to be careful though that we don't consume the planet while we're doing all this amazing stuff. I mean, I'll leave you with a statistic, which is in 2018 and 2019, so that's just in 2 years, China produced more cement than the US did in the entire 20th century. And a lot was happening in the US in the 20th century. I mean, you know, this unbelievable economy was built and the infrastructure was built. And, you know, we're now consuming 4.5 billion tons of cement, and the same goes for oil and everything else. And that's the unsolvable problem, which is we all want human progress. It's incredible how poverty has dropped and how the world has done better, but we are eating up the world, and we're going to have to figure out how to stop doing that.
Yeah, wonderful. And on that note, thank you very much, Andreas. Very insightful.
Thank you.